Welcome back to the Investing Thunderdome, where we don't diversify, we dominate. This video is for entertainment and educational purposes only and is not intended to form a basis for an investment thesis. Tonight's main event. IO Biotech, a $65 million minnow, $100 million fully diluted in the immunotherapy ocean, desperately needed to pair with Merck's monster Keytruda, the best-selling cancer drug on Earth. In the Investing Thunderdome, we recently had a major setback when the FDA told IO Biotech that they should not apply for FDA approval because of their narrow p-value miss. This news took IO Biotech to a low of 28 cents, and analysts were saying the company was going to go bankrupt. Things aren't always rosy in the Thunderdome. It gets a little messy around here sometimes. Then came the ESMO conference in Berlin, Germany, where the company was a late-breaking presenter. And after-hour trading the morning of the conference, about 45 million shares were traded out of a 65 million share total for the company. What were the people that viewed the conference so excited about? Firstly, it was a slide showing a durable response rate with a hazard ratio of 0.44 in the trial. This gives the drug a good shot of becoming stat sig for overall survival for the trial. Overall survival trumps progression-free survival, so the FDA approval is back in play, especially since the FDA just did a 180 on the CRL for Replimune and has allowed them to resubmit their BLA in the same indication. But a further review of the Kaplan-Meier curve shows something that has never been seen before in a cancer trial. Here's the PD-L1 positive patients. You can see median overall survival of 22.1 months versus 16.6 months. It's a good bump, but with the HR of 0.93, unless some long tail can be seen in overall survival benefit, this is not very exciting. Then you see this graph and everything changes. In PD-L1 negative, the group that has a progression-free survival of 3 months. This turns the immune system back on, and as a result, median overall survival matches Keytruda in the PD-L1 positive setting of 16.6 months progression-free survival. So you might be saying to yourself, well, is that really that great of news considering only 40 to 45% of metastatic melanoma patients are PD-L1 negative? And it's true, this would probably cut the market for the drug to about half. But here is where things get very interesting. Let me rope you in again. Firstly, IO Biotech's drug has to be first line. The people in the study with prior Keytruda experience fared worse. Simply put, you either get Cylembio in the first line setting or not at all, and it must be paired with a checkpoint inhibitor. Second, there are many other cancer indications where Cylembio could be used, which is where the drug takes an even bigger jump. Keytruda by Merck sales are about $30 billion per year, which is more than the GDP of some countries. Keytruda has a hard time helping PD-L1 negative patients, the 30 to 50% of people whose tumors don't express the PD-L1 target. In those patients, Keytruda barely moves the survival needle. This becomes a potential weakness to a $30 billion franchise in which IOBT holds the silver bullet, where IOBT's weapon is Cylembio, a dual peptide vaccine that retrains the immune system to attack cells expressing PD-L1 and IDO1, the escape valves that make cold tumors invisible to the immune system. Let's talk about potential revenue. Merck would make about $12 billion per year if the trials in melanoma, lung, and any other cancer area were to be effective for PD-L1 negative. Sales of Cylembio would fall around $8 billion per year in sales with those same indications. Plus, this would give Merck the ability to extend Keytruda in those indications and put up a giant wall of defense in this new market, because other players are unlikely to do combo therapies with Cylembio with these indications. Always remember, time kills deals, and if Merck delays, Bristol Myers Squibb is staring down the Opdivo patent cliff in 2028. They need a new differentiator to keep their checkpoint franchise alive. Opdivo is not Keytruda, but it is still a $9.3 billion per year monster. A quick strike on IO Biotech could instantly ignite Opdivo into being Opdivo plus vaccine, which would steal the market from Merck. Meanwhile, there are plenty of others that would take a hard look at IO Biotech as well. AstraZeneca is quietly building its own rescue plan for PD-L1 negative lung and GI cancers. Their durvalumab and tremelimumab combo already hints at synergy, and Cylembio could double down on that. They love subcutaneous dosing, low toxicity, and cheap add-ons, and Cylembio checks every box. So if Merck hesitates, Bristol Myers Squibb, AstraZeneca, or even Summit Therapeutics could move first, locking Merck out of the very moat that it helped dig. In the Thunderdome of oncology, IO Biotech isn't just a challenger, it's the shield that keeps Merck's empire from crumbling. For just $1 or $2 billion, Merck can buy another 10 years of dominance. Or they can pass and watch BMS, AstraZeneca, or Summit seize the initiative and partner with or buy out IO Biotech to start rewriting the immuno-oncology leaderboards. Either way, the next move decides who is going to get a whole third of the solid tumor cancer market. And this could easily mean a $10 to $20 share price buyout for IO Biotech investors. In the next month, IO Biotech will have dialogue with the EMA regarding their MAA application. Any news from this will either increase or decrease share price. Additionally, by next June, we will get the overall survival data. Here at the Thunderdome, we believe there's about a 70 to 80% chance that Cylembio will be stat sig in the overall survival data. This will create the path to an FDA BLA submission and an increase in the share price. Whether it's a partnership, a buyout, or just carving out their own road, we do see IO Biotech increasing that share price within the next year. Thank you all for watching until the end. If you like this kind of content, be sure to like and subscribe. I'm David Gibson, and this has been another episode of the Investing Thunderdome.